Thank you very much, distinguished colleagues, ladies and gentlemen. Good morning to you all from Vienna. First of all, please let me begin with thanking the Ministry of Energy and Minerals of the Sultanate of Oman and all the organizers for making the MENA Energy Meet possible. This event offers a timely opportunity to share expertise and knowledge at critical juncture for our global energy markets. I would like also to thank Dr. Salman Mohammed Al-Shidi, the Director General of Oil and Gas Investments at Oman's Ministry of Energy and Minerals, and His Excellency Mr. Joseph McMongle, the Secretary General of the International Energy Forum, for their stimulating remarks. Today, I will have the privilege to provide you with a short, brief overview of the world oil outlook, the WOO, as we call it here, which is the OPEC's flagship annual publication. Indeed, each year we revisit our world oil outlook to examine the developments in the global energy and oil demand, oil supply and refining, the global economy, policy and technology developments, demographics changes, as well as environmental issues and sustainable development. This year's World Oil Outlook also takes into account the unprecedented scale and impact of the COVID-19 pandemic on the global energy and oil markets and the prospects for the future. Unfortunately, the pandemic have induced significant economic as well as energy market challenges to our industry. This year, we expect around 10% contraction of the global oil demand to a level between 90 and 91 million barrels per day. At one point in the second quarter this year, we have faced the challenge of collapsed demand, met with surging supply, which resulted in storage capacity almost exhausted in many parts of the world. Although the uncertainty continues to overshadow the markets today, we expect oil to begin recovering somewhat to its levels, pre-crisis levels, sometimes next year as the global economy recovers. Our current projections show demand growth for next year to be around 6.5 million barrels per day. And indeed, this year's World Oil Outlook is especially timely because it extends the forecast horizon by another 5 years. Previously, we had it to 2040, and this year we extended it to 2045. We thus have a longer field of vision to assess the influence of the COVID-19 and other relevant factors such as the public policy and technology development. Next slide, please. Looking well beyond 2020, we anticipate that the global primary energy demand, as we see from this slide, to continue growing in the longer term, rising by around 25% between 2019 and 2045. This growth will be propelled by doubling the global GDP growth and more than a 20% increase in the world population by 2045. Rising urbanization and expanding middle class, especially in developing countries, will influence the energy demand in the future, as has been the case in many developed countries for decades. The Middle East and Africa region will account for close to half of the overall population growth, with the addition of nearly 790 million people during the forecast period. We expect the world's population to reach 9.5 billion people by 2045. It is a central premise for our outlook that all forms of energy will be needed for the foreseeable future. Indeed, there is no one-size-fits-all solution to all global energy demand, and the world will continue to need a diverse portfolio of energy options to keep up with the anticipated demand growth. Next slide, please.
It's already. Sorry.
One option, renewable energy, will grow significantly faster than the other sources of energy at an average rate of around 6.6% annually. The natural gas will be the fastest growing fossil fuel during the forecast period and will be important to supplying energy to growing urban areas and industries. The free fall in the demand experienced this year has fueled a great deal of speculation about the future of crude oil and its prominence in the global energy mix. However, our projections show that oil will continue to account for the largest share of energy mix by 2045 and provide a stable foundation for addressing global energy needs for years to come. We anticipate that oil will supply nearly 28% of the global demand in 2045, and that the oil and natural gas together will meet more than half of the world's energy need, just as they do today. I would like to point out that the mainstream consensus of other leading reporting agencies, they have the same forecast almost, anticipating that oil and gas will retain their prominence in the global energy mix. Next. Based on the expectation that COVID-19 is largely contained this year, oil demand is forecast to recover and increase by almost 10 million barrels per day, rising to around 109 million barrels per day by 2045. We expect demand in the non-OECD region to rise by 22.5 million barrels per day to around 74 million barrels per day by 2045, with India and China leading this growth. Our past assessment have noted that oil demand growth will increasingly shift to developing regions, and this trend continues to reflect in our extended outlook this year. Steady growth is also expected in the Middle East and Africa, and the demand growth in this region is expected to rise from 4.4 million barrels per day seen last year to around 7.6 million barrels per day expected in 2045. Of course, there are many lingering uncertainties. Questions remain about the duration of the COVID-19 and its economic impact, especially with new waves threatening many parts of the world, as we see now in Europe and North America. Over the past few days, many European major economies, including Germany and the UK, have announced partial or even complete lockdowns, a further sign that we are not yet out of the woods. The possibility of a new normal in working and living patterns and their potential to alter energy needs going forward pose further challenges. Next slide. At this point, please allow me to highlight to you a few points from the sectoral perspective. Petrochemicals, as we see from this slide, as well as transportation, will continue to underpin oil demand going forward. Electricity generation is the only area expected to see a decline in oil in this sector, and they will lose ground to the renewables and gas in the power generation sector. The road transportation is still in the driver's seat, around 43% of the total demand by 45. And again, the non-OECD countries will fuel the future growth in this sector. Aviation has experienced particularly turbulent year, especially in the international routes. We expect this year, or this sector, to partially recover next year to the year after, and grow significantly afterwards in the long term. Another key sector is the petrochemicals, as we see from this slide, which is projected to be the largest single contributor to the incremental oil demand over the forecast period, growing by almost 4 million barrels per day. Next slide, please. On this slide, we see the non-OPEC liquids expected to recover from the pandemic-related shut-ins over the medium term. Canada, Qatar, Kazakhstan, as well as Guyana, are expected to see meaningful supply growth after 2025, while our projections show that the production in most non-OPEC countries will stagnate or decline in the longer run. As a result, the non-OPEC supply will decline from a peak of around 72 million barrels per day by the end of this decade to around 65 million barrels per day by 2045, similar to the levels that we have observed in 2019. OPEC liquids will increase from around 43 million barrels per day observed in 2019 to around 44 million barrels per day by 2045. And by the end of our outlook period, we expect OPEC member countries to account for around 40% of the global liquid supply. This compares to the 34% share that we have seen last year. Next slide. In the downstream, we expect the crude distillation capacity to increase by around 15.6 million barrels per day by 2045. Most of these additions will be located in the Middle East and Africa, as well as Asia Pacific. We also anticipate a wave of refinery closures as new capacity comes online in developed markets. The traded volumes of oil are expected to grow only modestly in the long run, in line with the supply patterns. However, we foresee that the Middle East share of the global oil and condensate trades will rise robustly in the longer term. Distinguished colleagues, ladies and gentlemen, COVID-19 has delivered a hammer blow to the investment and adds to concerns about the stability of the capital flow that exists before the pandemic. The latest analysis shows that upstream capital expenditure could plummet by 30% this year, exceeding the annual drastic decline that we have observed in the years 2015 and 2016. We do not believe that the investment will recover to the 2019 levels until at least 2024. Looking further down the road, the World Oil Outlook forecasts that the investment of more than $12 trillion will be needed in the upstream, midstream, as well as downstream between now and 2045. Indeed, stable investment is essential to our industry, which in turn is indispensable to the way of life. Investments help us retain historic leadership in developing and deploying technologies to provide stable economic and secure energy supplies for the future. We also need the capital to support the human capacity development, and there is no one without the other. OPEC and its member countries are fully supportive of Paris Agreement, and many of our member countries have already diversified their energy portfolios. Again, investment capital is needed to help us achieve our goals. Next slide. At the same time, we also need to elevate energy poverty. This year's World Oil Outlook included a dedicated chapter in the energy policy, climate change, as well as sustainable development, and explored options for achieving inclusive solutions. The COVID-19 has added a new layer of vulnerability to around 800 million people in the world who had no access to electricity. The sheer magnitude of the access challenge calls for all available energy options, including oil and gas. In conclusion, 2020 has been a year without precedent for oil. It has been a year of unprecedented cooperation too. In April this year, OPEC and non-OPEC countries participating in the Declaration of Cooperation undertook the largest and longest production adjustment. At first amounted to around 10 million barrels per day of around 10% of the world supply as part of the collective effort to stabilize oil market. And then in June this year, the DOC participating countries reaffirmed their earlier commitment, strengthening the monitoring as well as boosting their conformity levels to historical highs. These bold and historic efforts have been instrumental in helping restoring the stability and the confidence in the market, of course, to the benefits of the consumers, producers, as well as the global economy at large. I would like to thank at this point the Sultanate of Oman and His Excellency Mr. Mohammed bin Hamad Al-Rumhi, the Minister of Energy and Minerals, for their participation in the Declaration of Cooperation since its inception in 2016, and unwavering commitment to sustainable market stability since then. Together, the DOC participating countries have witnessed unprecedented level of support from the highest levels of governments, multilateral institutions, and many other leading energy stakeholders, including those participating in the MENA Energy Meet today. At OPEC, we are hopeful that the experience leads to expanded collaboration at the international level to help achieve more stable, resilient, and inclusive energy future. Ladies and gentlemen, dear colleagues, thank you again for giving us this opportunity to present to you our World Oil Outlook 2045. And I look forward to any questions or further inquiries that you may have at a later stage, and look forward to continuing today's discussion with you. Thank you very much, and back over to you, the moderator.